Good afternoon. After a long wait and speculations, Auto PLI has finally rolled out in a new avatar. This policy has triggered immense curiosity and discussion in the industry circles. We all may have questions, confusions. So, in this live interactive panel discussion, we'll try to get answers and clarifications from the stakeholders and one of the key persons behind the formulation of this policy, and also understand what's in it for you. So please feel free to post your questions, comments, and thoughts in the comment box. Today's panel members are stalwarts of their respective fields and really don't need an introduction. But just for the sake of it, let me introduce them to you. Mr. Arun Goyal, Secretary, Ministry of Heavy Industries, Government of India. Mr. Sanjay Kapoor, President, ACMA, Auto Component Manufacturers Association. He is also chairperson of Sona Comstar, a leading auto component manufacturer. We also have Mr. Mahesh Babu, Chief Executive Officer, India, and Chief Operating Officer, Switch Mobility, electric vehicle business subsidiary of Ashok Leyland. We are also joined by Mr. Kavan Mukhtar, a management consulting partner at Price Waterhouse Cooper. And I'm your host and moderator, Nabil A. Khan. Thank you so much, gentlemen, for joining ETAuto panel discussion, from taking out time from your busy schedule. Let me first begin by inviting Mr. Arun Goyal to make his opening remark, underlining the vision behind the PLI scheme. Thank you, Mr. Goyal, for joining in. Over to you.
Yes, Nabil, Government of India has come out with the production-linked incentive scheme for auto sector for rupees 25,938 crores over 5 years. The basic objective behind this scheme is that the supply chains which are non-existent or weak in Indian auto sector, how the government scheme, which is a PLI scheme, can act as a catalyst to bring about the structural change which is now inevitable if we look at the changes in global auto sector. See, the global auto sector is today facing biggest disruption since its inception over the last 100 years or so, because as all of us know, till now, auto sector has been ruled by internal combustion engine. But the technological advances in the past few years have now given other options, which are now going to change the entire spectrum of auto industry across the globe. So the government has come out with a scheme focused at advanced automotive technologies, which will be applicable both for the ICE vehicles as well as non-IC vehicles. So Indian auto sector, you see, Nabil, all of you know, is a great success story. So today, in numbers, we are at number 1 in world rankings, is various components, or at number 4 or 5. But in value terms, we are at number 11. So if we look at the advanced automotive components, their share of Indian auto sector production is about 3%, whereas the global percentage of the advanced automotive technologies is about 18% and is likely to go to by 2030 to 30%. So the size of pie of advanced automotive technologies is going to increase immensely. And in India, we have these supply chains which are either weak or non-existent. So the entire scheme's objective is to give a boost, to act as a catalyst, to help the industry to create those supply chains so that in the years to come, Indian auto industry is able to encash the bigger size of pie at the global level to a better extent.
Thank you, Mr. Goyal. Obviously, you have rightly spelled out the focus is going to enhance the quality, to get into the sophisticated technology. We increase our pie size in the global at the global level when it comes to advanced technology. I would like to bring in Sanjay here because I've seen a lot of focus on the advanced technology when it comes to component, be it safety side or cleaner mobility. How do you see this giving a boost to the auto component manufacturers?
So, Nabil, as Mr. Arun Goyalji said, this is really a very forward-looking policy in terms of what's going on globally and in terms of disruption in the automotive industry. We're well aware of the fact that the automotive industry globally is changing very fast. The adoption of technology across the board is essential, not just for growth, but also for survival now. I think the policy encourages companies in the component space as well as companies that are not in the component space today, because again, the competitive landscape is changing so fast and so rapidly with the technology disruption that we're seeing new entrants. And given the fact that there are new entrants, companies that are already in the auto component space also need to invest in technology and need to invest in newer technologies to keep pace with the change that's happening. So it's definitely a push in the right direction. There's a lot of emphasis and focus on energy security, on environment, on climate change, future ready. These are really the key aspects that have gone behind, the thought process of bringing out a scheme like this. Reducing carbon emission, again, very, very well thought through in terms of creating the right environment and the right steps towards where the world is going, not just India. And I feel that this is a good push for Indian industry to invest in technology, and this will benefit not just the tier one suppliers but across the value chain. Tier two, tier three, as well as upstream. So this is definitely positive for us, the way we look at it in the auto component industry. Of course, we need to go into detail and understand the definition in terms of components, and etc. And we're working closely with the government, as Mr. Arun Goyal rightly said, earlier in other conversations also, they're very open to feedback from the component industry, which is definitely a positive. And we hope to evolve, the policy together to benefit the component industry as well as OEMs, hopefully.
Sanjay, we'll definitely get into the detail in the next round. Let me bring in Mahesh Babu Shia. He is now heading the electric vehicle arm of Ashok Leyland, one of the leading commercial vehicle manufacturers in the country. Mahesh, it seems it's a golden era for you. Look at the electric vehicle push that the government is giving. Obviously, this PLI scheme, and before that, ACC PLI, and you also had FAME 2 scheme. Looking at all this scenario, how do you estimate the market to be ramping up in India for electric vehicles? And what's your preparedness? How hopeful are you with these? Because looking at the current market share of the market situation in the traditional automotive space, where we see there is a market going downhill, and there is a trimming market share for every company there. So how do you see it? Do you think it's the rise of electric vehicle now that has started in India?
Well, thank you for having me here. Firstly, I would like to thank Sri Arun Goyal and Government of India for coming up with a auto PLI scheme which supports not only EV but others. But EV is going to get benefited. I see more in the auto PLI scheme linked with the ACC PLI on what came for the advanced chemistry batteries. I think if you look at the overall system, Nabil, I think 2020, the whole auto industry came down, not in India, globally by about 14%, but EV went up by about 41%. This clearly says that there is a huge adoption shift happening with the turbulence, what's happening due to pandemic and others. As rightly said by the Secretary DHI, Sri Anil Goyalji, this is the time India needs to take a bigger pie in auto industry, particularly in advanced technology like EV, fuel cells, and others. There is a clear PMP program which helps FAME, which actually forced the industry, some of them who are still importing some of the parts, and make India manufacturing hub and IPR design hub for electric components. I think the auto PLI will scale this electric mobility at a larger scale. there was a very clear scheme for auto OEM. There is a clear scheme for component manufacturer within auto OEM. There is a clear, what I would say, specification for new entrants. There is a clear specification for existing players. I think it is a very well thought through policy, and it had been consulted with auto industries across. And I would personally thank Sri Arun Goyalji. He traveled across India, came to Chennai yesterday and met all of the industries and took inputs from what else can be done. Because I think it is very important that industry cooperates and co-creates the future of the consumers with government. And similarly, government thinks that industry is a partner. And both of us have to serve the customer ultimately. And the customer narrative is to how to democratize zero carbon emission mobility in India. I think that's a very ultimate aim, and we are committed, and I'm sure auto industry is completely committed. And thank the government of India and the Department of Heavy Industries for coming up with such a scheme. We'll continue to engage and we'll continue to co-create future solutions for our country.
Thank you, Mahesh. I'd like to bring in Kavan here. Kavan, Mahesh also pointed out that we are doing already Make in India. There's a strong thrust on Make in India, but this PLI probably give a thrust to design in India. If you look at the Indian auto industry, it's largely built to print kind of setup that we have. Mostly we are working on a joint venture or technical alliance kind of scenario. This technology is a new technology. Does it open, with this PLI, will there be a thrust to more of design in India and along with Make in India? How do you see this?
So thank you, Nabil, for inviting me to this panel, and greetings to Mr. Goyal, Sanjay, as well as Mahesh. I think this policy is definitely with the future in focus. I think the government has given a clear signal to the industry that we need to embrace change. We need to accept that globally the mobility world is changing. And one thing which, whatever I have read about publicly available documents on this, it's not just about EV. In my opinion, it is about clean, sustainable, and safe mobility. And there will be benefits even for the internal combustion engine area. Like as I have noticed in the auto component segment, automotive electronics may be eligible for these benefits as well. And what this will do is, whatever cost disabilities India had, I mean, you look at the import statistics, we've been importing a lot of auto electronics because, the volumes for these components were much lower here. And it probably would not make sense to design and make things here. But now I think with this policy intervention, it's going to be something which companies will look at that can be localized. And I think that will kickstart the whole process of setting up design, manufacturing capabilities in advanced auto technologies in India, which will make our country future ready in many respects. So yes, there are parts of the industry, especially traditional metal working industry, that may not be able to take advantage of this immediately. But maybe it's also a signal for change that we need to look at with an open mind and move forward into the future.
Thank you, Kavan. With this, I would like to come back to Mr. Goel. I spoke to a couple of industry captains, those who have larger share in the internal combustion engine products. They were like, why the government is talking about any particular technology? Why not give right away the target in terms of reducing the carbon emission or trying to achieve any particular goal that we may have? Like we have in cafe norm, we are talking about 130 gram per kilometer. Similarly, we can probably have a target, and the automotive manufacturer should have that liberty to choose the technology to achieve those kind of targets, whatever the target or the goal the government is trying to achieve. So what's your thought on this, Arunji?
Naveelji, I think the people who have given this leading question have not read the details clearly, this policy is technology agnostic. Government is not prescribing any technology. What the government is saying is improvement in the technology. Along with, as you rightly said, designing, I'll say we know if we compare our companies globally, the percentage of turnover being spent on engineering and product development is not commensurate what global companies are doing. But good thing is it is increasing. So our industry is moving in that direction. And then it could be in any technology. So engineering, research and development and product development can be in any technology. I'm repeating it again and again because that's a misconception. As Sanjay ji said, we have asked the industrial organization ACMA for the auto components and SIAM for the automobile vehicles to tell us which of the supply chains are non-existent or weak. They could be in any technology. As you know, SIAM and ACMA, majority of the members are in the ICE business. So we have asked them to tell us the products. The point here is what we are not producing as of today to the desired extent. As I said, 3% is our ratio of the total production in advanced automotive technologies, whereas globally it's 18. Now this is beyond the engine. When we are talking of the vehicle components, let's see auto electronics, auto electricals. So these components go all types of vehicles. They may be EVs, they may be ICE. ICE could be using the fuel of petrol or diesel or CNG or ethanol. So these advanced automotive technology products go to all kinds of engines. And as we know, as the vehicle price goes up, the majority of the value addition is on account of these. That's why you see in value terms, we are at number 11 because high value things, which are high tech things, are mostly being imported and the exports out of India are less on that. That's why the global trade in auto industry, which is today about $1.5 trillion, from India, we are exporting 12 billion when it's vehicles and 15 billion when it's auto components. So totally we are exporting $27 billion, which is less than 2%, while we are importing on the component side about $17 billion. So what we are saying is all technologies. So the products pertaining to any kind of engine. So that list, I think Sanjay ji can more explain in more detail because we have been in touch with them for the last many weeks. And I think they are going to give us the list of technology agnostic components.
So probably the headline says that electric vehicle, fuel cells, and drone. These three, that's the strong point that comes out. And looking at the current market share of electric vehicle, that is about 2%. And look at the traditional ICE engine vehicle market that has been on a slide. If you look at passenger vehicle, it was 3.4 million. It has come down to below 3 million. Similarly, two-wheeler, which was about 24 million, it has 21 million. It came down. Then now it is even below 20 million, about 17, 18 million. So we have seen that industry is on the slide. Do you think there's some requirement to look at them also, or it's the pedal of transition has already been pushed and now no looking back? What's the thought?
No, Nabil ji. We looked at all the aspects. I'll give you the complete story now. You see, in the EV side, earlier, the main product of Tesla was more than $100,000. After they introduced the vehicle at $40,000, there has been a sea change on the global scenario. Most of the global MNCs have now given specific deadline when they will shift completely from ICE to EV. What does that mean? The things are changing. This is a disruption I talked when I answered your previous question. Now, if globally such a big shift is happening to EV, and now let's look at what is the investment in capacity creation on EV side in India. It's negligible. Now, it doesn't happen overnight. Auto is a complex industry. There's a lot of pre-approvals required. So anything which we start today will give revenue at least 2 years from today. So if we do not move today, the share of imports in Indian auto sector will grow manifold because the world is changing. So when the writing is on the wall, the world is changing, we ought to see where the future is and we need to move in that direction. That's number one. Number two, on the ICE side, in the 5 years prior to COVID period, we have had investment of about $34.5 billion. Obviously, that's entirely in the IC side. Because of COVID, the capacity utilization has come down. We have already immense capacity which is underutilized on the ICE side. So there is a need of government encouraging when we have surplus. Secondly, on the ICE side, in value terms, we are very low because we are a mass market, low value, low technology production hub. If on the ICE side we have to increase our share, we need to do what we have not been doing so far. That is the advanced automotive component. So we need to create higher value, for which we require high tech, for which we require engineering, R&D, product development, and that's what is not happening to the desired extent. So government is encouraging that for the ICE sector.
So value creation is the target. That's a very important point you have raised, Mr. Well, Sanjay, I just want to come to you and understand from you. We have seen traditionally auto component industry has been involved in components which are low on sophisticated technology. We still don't do too much of automotive electronics. That's rightly Mr. Goel pointed out that that is a value creation product. That's a product that will enhance your revenue for vehicle content. So how the component industry is trying to deal with it? We have seen most of the Indian component industries are small scale. It requires a lot of hand holding from the tier one or the OEMs, and the investment in R&D has been below 1% compared to 4-5% in the developed country. So what would be the way forward for the auto component sector to match the expectation that has been laid out in the vision that has been just told by Mr. Goel, and the PLI also seeks to do that?
So Nabil, great question. Let me, begin by saying that naturally, MSMEs form 65% of ACMA's membership. So we're very cognizant of that fact. What I said earlier was that the benefit is not just at the tier one, but will go across the value chain, and that's really the intention of the policy, from what I understand the policy today. The other thing is that OEMs are now looking for system suppliers, not component manufacturers alone. The world is changing, and if we keep doing the same thing the same way, we're not going to be able to leverage the benefit of the technological change and the opportunities that exist. We're going to have to invest in technology. The days of 1% investment of revenue are gone. Today, our own company, we're investing over 5% of our revenue in R&D, last year. And that is the case because of the fact that we're, looking at what we can, manufacture for the electric vehicle industry. Again, because technology is changing, the supply chain across the board is going to have to adopt and adapt to this change and invest in technology. I think that's part of your question. What was the other part of your question? Sorry.
So how are you trying to, because you work on a joint venture basis when you are blocked in many of the international markets where high value products are to be exported to increase your revenue or the global share, as Mr. Goel mentioned. How will you increase your revenue
Yeah, so
share?
Nabil, it's very clear that we are going to have to own our own technologies. That's the only way forward. Price is not going to take us very far. It's going to be technology. People are not going to move business. When you look at the China One Plus strategy, etc., and the opportunities that we saw, when the first wave of the pandemic happened, this will only really see any light of day if we invest in technology. The other part you talk about electronics. Electronics is extremely, extremely important. Every car is going to have more and more electronics. There's going to be more connectivity in every vehicle. And the need of the hour is for India to localize electronics. If you look at the kind of imports we have by 2025 as a country, not as an industry, but as a country, we'll import close to $250 billion worth of electronics. Now, there is a great opportunity to localize, to invest in technology and build these products in India. And if required, we should, as an industry, maybe collaborate with other industries so that we can localize, the whole electronic components. So I think there are a lot of opportunities here that you've talked about, and I think it's for industry and private sector to really invest in technology to take this forward.
Thank you, Sanjay. I'll come to you, Mahesh. The policy talks about fuel cell and our hydrogen fuel that India has been talking about. I think Indian Oil, I heard Indian Oil doing research on this 10 years, 12 years ago when I was a young cub reporter. Then also I heard that there's a lot of action, a lot of work happening now. Actually, the PLI scheme has come, a lot of startups are there. And in the commercial vehicle space, we see huge potential for fuel cell. How do you see this translating the Indian commercial vehicle space in the coming future?
Nabil, I think what you're saying is there are two sets of technologies which are there. 10 years back, when EV was like fuel cell today, there was a disbelief and there were no belief in consumer, industry, and many more. I think in past decade, we have moved substantially in terms of technology, battery technology, EV adoption, consumer education, government, what I would say, support, industries, investment. We have gone substantially ahead in EV in the past decade. Now, fuel cell is starting something like that. Now, we'll have to look at the fundamental technology. The most efficient way of driving a person or a goods by 1 kilometer is an electric vehicle. Nothing can match its efficiency of 85 to 90%. Now, fuel cell is a very good clean energy, particularly when you use green hydrogen, a clean energy mobility solution. But it's going to play initially a vital role in long distance trucks and many heavy duty applications. There are many reports I have seen, something about 300 plus kilometer range makes economic sense of fuel cell, whereas 300 to 400 kilometer range EV still makes economic viability for the fleet operators or things like that. So the focus of commercialization, scaling up, and bringing India to the global scale is going to be in EV in the next decade. That's why Switch Mobility we are doing. We have a headquarter in UK. We are now put all the Ashok Leyland's EV business into the Switch. Now we are looking at exporting components and parts from India. We are looking at value addition of about 70% from India to the Switch global contribution. So that is the role we are looking at. I think India has to look at now how do we play a value chain globally, and that high value, like Sri Arun Goyal ji said, high value software, embedded system, battery packs, and power electronics. I think it's a huge opportunity. We are in the right position. We will scale up this. Having said that, the new technologies like fuel cell, there is a substantial investment announced by IOC, Reliance, and even yesterday Adani's. I think it is at a stage where people are looking at scaling up on many fronts. So it's also going to help in stationary application. It's also going to help in many other areas on fuel cell. But we'll have to look at green hydrogen, not at gray and blue hydrogen. So we have to work a lot around it. I'm sure it is in the right direction. We need to work on that to make it economically viable sooner than later.
Thank you. Kavan, if you look at the threshold or the capping of criteria of the PLI scheme, what percentage of auto component industry you think will be able to participate in this? And don't you think it will give a bit of advantage to the big players, and the smaller one will become probably a less advantageous position? There will be losing the competitive edge that they might have with this PLI scheme. How are you going to address see positivity in this scheme? Because I heard a lot about from the industry people complaining on this line also, especially the small players.
Yeah, Nabil. So I think globally, if you look at it, the automotive component supply chain is very tierized, and even in developed market like Germany, you still have family-owned businesses that are thriving because they are part of this tier. They need not necessarily get a direct benefit from this scheme, but one is part of the tier, and therefore the demand uptake that happens because the larger guys are investing further. That is how it will result in healthy development of our supply chain. And in my opinion, whatever I've read of the document, I think the whole industry will definitely have to approach with an open mind and be ready to invest in new technology. But whoever has the appetite to go ahead and take that risk and belief in investing in new technology will benefit from it. And you're right. I think, see, all the PLIs, not just automotive, and Shri Arun Goyalji can comment further on this. But my understanding is PLI is all about getting big investments in areas where India is, currently technologically weak. So if you go by that theme, yes, by design, it is direct benefit is targeted towards large companies. But the good thing in the automotive world is the supply chain and the structure is such that everybody who's part of that chain will benefit as well. And yes, it's a harsh reality if someone is just not doing enough value add. Their business is going to get challenged in the automotive environment. I mean, there is no doubt about it that there will be some consolidation of weak performers. And I think this is the time for them to look back and reflect into how they can redesign their business for the future.
Thank you, Kavan. Mr. Goel, I have another question that is again coming from the industry only. I've been talking, and there has been a lot of question. The other very hopeful and optimistic question: earlier, the PLI scheme was planned to be having an outlay of 57,000 crore, which has been reduced to 26,000. So, is there something fresh and new coming up with the other part of the fund? Do we expect something new coming up in the mobility or automotive space?
Naveelji, as I started, see, we identified the requirement. Now, you see, when you go to a doctor, you go to a specialized doctor, he does a diagnosis, and then he does the treatment. So, Indian auto industry is a success story, and we are proud of it. Now, the question is, as I said, how to take it to the trajectory of higher growth. So that means we need to do what we are not doing or what we are weak. So to answer that question, we did a detailed calculation. We talked to the industry multiple times. They told us why those supply chains are missing in India. When we asked them to quantify in monetary terms, so they told us there's a cost disability of around 15%, because of which fresh investment in advanced automotive technologies is not coming. So it's about 15 to 18 to 20%. That's what they said, depending on which sector it is. In this scheme, see, it's not what normally one experience is. You go to government, you ask for 10, and we give you 5. No. In this case, what the industry asked has been given fully, because the incentive payout goes as high as 18%. We have not put any cut on the cost disability projected by the Indian auto industry, both the auto components and the OEMs. Now, then we did the calculation, because earlier in one of the questions you asked from Sanjay ji, how many companies are going to get benefit of it. So we looked at the financials, annual reports of the main people. Now, we studied 15 OEMs and 75 auto components. And then we saw that we built a criteria where almost all of them will fulfill the eligibility. Now it is up to them to participate or not. So then we looked at what kind of investment they can easily bring in, keeping in mind their fixed assets and what they have done in the past. So when we tabulated that, the requirement for fund came out to what we have come, that is rupees 25,938 crores. Not even a single penny has been cut. So in totality, there's a disease, there's a diagnosis, and there's a treatment. It's all 100%. There's no gap in it. So we request and we hope that the industry will take full benefit and exhaust the entire allocation in merit. But it's not stopping at that. Normally, government schemes policy have a rider that you can't get benefit of two schemes. Similarly, in PLIs, that you cannot get benefit of two PLIs. This is where we have created an exception. So what we have said, the products which are output of PLI and advanced chemistry cells, which has an outlay of rupees 18,100 crores over 5 years, they will be eligible to get benefit under PLI for auto as well. So it is in addition, an exception has been created. Similarly, for electric vehicles, we have reframed the FAME 2 in last June, which has an outlay of rupees 10,000 crores. So we have again categorically said that you can get benefit of those two as well as FAME. So triple benefit. Now with this triple benefit for the EVs, I think Maheshji can vouch. Probably there is no other country in the world which is today a better base for manufacturing EVs than India. So now the time is for the industry to make the investment and walk the talk and make India a leader in global EV manufacturing.
Thank you, Mr. Goel. Just one more clarification. Of course, certainly Mahesh, Babu, and other big corporates are going to get advantage of this PLI, and I think they can accelerate their EV dream sooner than later. Just want to understand, in India, if you have seen in the last 3 4 years, I have seen several dozens of startups have come up. Their investment level is very low, and for the a new entrant also, the cap or the criteria or the threshold that the PLI puts is about 1000 crore of the net worth, and then 2000 crore of investment. uh, why these kind of high criteria for a new entrant? That's what I wanted to understand.
You see, again, as I said, every scheme cannot be meant for everyone.
Okay.
There is a particular diagnosis, there is a particular treatment. Already Government of India has launched various schemes or components where startups are going to be direct beneficiaries. But let's look at this only. As Sanjay ji said and as Kavan ji said, you see, auto industry is a highly complex industry. Let's go back 30 years. And Sanjay ji can vouch for me. What was Indian auto industry? How has Indian auto industry grown? Everybody is not born tier 1. You start tier 3, you become tier 2, you become tier 1. Today he is spending 5% of his turnover on engineering R&D. On day 1, you cannot. It's not possible. So what in this scheme we are giving is at the end product level, to simplify the scheme and to ensure that there are no leakages. The incentive payout is at the last stage. So whether it's a component or a vehicle. But that doesn't mean that stage will corner the entire benefit. It's not possible. Tier 1 is dependent on tier 2 and tier 3. So now let's look at the startup angle. So startups. So when we are talking of the new technologies, hydrogen fuel cells and EVs, or even in auto components, we are talking about engineering product development. That is a domain which is going to benefit the startups in a huge way. So those startups who do that thing would then need to frame some kind of JV or whatever setup business thing to go into production on a large scale. Now, a startup obviously cannot do huge production immediately. So you need pooling of resources. So you have established players and you have the startups. So how we have encouraged startups? We are talking of advanced automotive technologies. So the players today, they are very good established in manufacturing, but they are not, all of them are not as strong today. Like Sanjay said, he's doing 5%. Everybody is not doing 5%. So those who are not doing 5% of turnover on R&D, they can coordinate with the startups. So the startups bring that engineering and product development, the manufacturers encash that, and both of them take benefit of the scheme. So the payout is meeting the cost disability fully. So tier 1 cannot encash without the cooperation from outside or within. And then in the EV sector, we have the PLI on ACC, where we have kept, see, it's meant for 50 gigawatt capacity. 500 megawatt we have kept purely for niche technologies. So that is entirely for startups. So we want our brilliant youth to encash these schemes and contribute towards technology innovation, because that's what is going to take Indian manufacturing forward. In the Ministry of Heavy Industries, over the last 1 year, we have launched 6 tech innovation platforms, 2 of which are through ARI Pune and ICAT, entirely auto. Third is with the IIT Chennai, then CMTI, and so on and so forth. There we have brought about 50,000 people, that's the youth, the academia, the engineers, and the product developers and entrepreneurs. So all of them combined, they pool their resources for innovation, for engineering, for design and development, for product development. So we are trying to help the startups and the youth, the brilliant people amongst us who are whether in the academia or on the product development side, to come together to take the Indian manufacturing forward. So this scheme is endorsing that you combine that your the creation, your development into the mass manufacturing, where we already have established players. So they need to get together to get benefit out of this scheme.
So there's a hand holding and the collaboration within the ecosystem is required to create innovation. That's the idea that you're throwing. Sanjay ji, just want to understand from your side. Mr. Goel also said that hope we utilize the entire package that is being rolled out. We have seen in the past also when it comes to utilization, we have seen there has been some hiccups. How the industry is ready to fully utilize this in the next 5 years? What's the action plan now? Can you give us a sense what's going to happen in the ecosystem now?
So, Nabil, I think it's a little early to answer a question like this. However, we're excited about the fact that the government has, laid out this plan. As the secretary said, 18% is the payout, which is well above what they've calculated to be, the cost disabilities. To your question also, to Mr. Arun Goyalji, the fact is that, and I said this earlier, and I keep saying this is going to impact the entire value chain. So it's going to benefit, and when I say impact, I mean positively impact. So it's early for me to say, how we will utilize this. However, once we get going, once we get into the nitty gritty of this, we'll come back with more answers with regard to this, and hopefully, and I'm confident that schemes like this will definitely put us on the world map. Our aim really is to be a global supplier with Indian manufacturing? Can we create a hub for Indian for manufacturing automotive components for the world from India? And that's really the aim for us as a component industry, and to build competitiveness throughout the component industry to take on what comes next in terms of disruption, in terms of technology advancement, in the industry.
Mahesh, your thought on this?
I think if we are not utilizing the budget, we have to blame ourselves. I think an opportunity can be given to industry to grab what is available. It is also depending upon what is aspirationally we can achieve versus in reality what we can achieve. But I don't think we will leave any opportunity to that extent what we have been talking about. You must be talking about FAME scheme. But most of the PLI scheme, at least in which we have already started looking at on investment versus what it is. And I'm sure many auto OEMs would started working on applying for the scheme from November or whatever is the timeline given. Similarly, for auto component industry, we can't throw a number, but I strongly believe that it will not be underutilized. We will be, in fact, overwhelmed if somebody can go and ask Sri Goel ji after 3 years, we want to increase the number. If that happens, then it is a success for Indian auto industry, and I am looking forward for that.
Kavan, just want to understand from you localization. You look at the schemes that are rolling out. The soul of it is making India Atmanirbhar, be it in design in India or make in India. Look at the famous scheme that talks about localization. Even a battery cell comes cells are imported, they are assembled into a battery pack, and they are also given the advantage of being localized. Similarly, it is the case for many other components. You bring the child parts, you assemble here, and you call it a localization. Do you think there? How does this scheme define the localization? Is it different from that, or do you think there needs to be a real look at the definition of localization?
No, I think the details are yet to come out, so we'll see in the fine print. But for me, I think one of the important points is, and I've been advising clients in this industry for 25 years. The kind of enterprise I have seen in India, and I've worked in other parts of the world, including Asia Pacific. I believe our entrepreneurs will seize this opportunity and venture out and not just make it into a screwdriver or assembling technology. I believe our entrepreneurs will localize in the true sense. And we do have the capability as an automotive supply chain, and even the OEMs. And I believe the OEMs, even if they are not direct beneficiaries, will play an important role in this. Because, like I said, right now you look at the extent of, say, navigation systems, for example, right? I mean, it's a auto electronics part. I assume it will be eligible for benefits if we start making it here. Right now, very little manufacturing is happening. Now, the question for an OEM is, does it make sense to encourage their suppliers and their global suppliers to come and set up base here and use India as a base for manufacturing? Possibly even invest in some of the startups and help them scale up. So I think even like Mahesh mentioned, I think OEMs will also have to take a fresh look at this. That how they can benefit from this beyond EV into even the supply chains, because many of them have their international purchase offices in India as well, and a lot of their supply chains, even smaller companies, are present here. So can some of these global programs, whether it's on auto electronics or safety systems, can they be brought to India? Of course, in the initial plan, we heard that there is very high cost disability. I think this scheme can help bridge that and therefore encourage more investments. And that will result in localization, in my opinion. Thank you.
Thank you, Mahesh. I'll come to you, Goelji, once again. One or two more questions, then we'll wrap up. Just one, of course, the scheme certainly talks about futuristic mobility, and I'm not talking about future automobile industry, but futuristic mobility solution. That's what you are encouraging that is going to be clean, connected, and probably autonomy also. You talked about 120 crore for drones also. So how do we? Can you give us more sense of how do we look at this being utilized for mobility in India, and how are we going to ward off all these security concerns that may have come?
Nabilji, you see, drone is also doing transportation of a type, mobility. So that's why that has been included along with this PLI. Under the PLI for drone, uh, the local value addition. So let's suppose the total value is 100 rupees, of which 60 rupees is imported and 40 rupees is a local value addition. So on that 40 rupees, which is being done in India, there will be 20% of that. That's 8% will be the incentive payout. So as on today, the turnover of the industry, drone industry, is lower than the 120 crores, which is going to be the payout. So the payout is more than the size of the industry. And it is at nascent stage, it's upcoming. So that is for 3 years. The details of the drone, if you see, the concerned ministry is the Ministry of Civil Aviation. So they'll be soon coming out with the detailed scheme and guidelines. So they'll be able to answer the question which you are raising in security and other aspects.
One more thing, sir. We have seen that the industry has been crystal ball gazing for the electrification of the automobile industry for a long time. Somebody is saying this person, somebody is saying that person. While you were drafting this PLI scheme, uh, what are the outcome that you think? If you could give us a sense, what percentage of electrification you see in terms of passenger vehicle, in terms of two-wheeler, or is there any sort of analysis or thought process that you went through while devising this?
So Nabilji, when we were looking at this scheme, we looked for the entire Indian auto industry. We did not look at EVs alone. So I can give you what we looked at the entire Indian auto industry. So we are thinking that approximately 45,000. So approximately 45,000 crores of investment should come in 5 years, and we should have incremental production on this account going to the tune of rupees 2,31,500 crores, generating additional jobs to the tune of 7.6 lakhs. So this is the outcome we are expecting as a result of this payout from the entire Indian auto industry, not mainly Indian EV. So I also think that the Indian auto industry, the main IC industry, is going to be the main beneficiary. Although the narrative you are saying is for EV, which is incorrect. EV is going to be great beneficiary, no doubt. As I said, the three schemes combined, it changes the landscape of EV. So another point which you're trying to say, not taking a benefit, which Maheshji answered, uh, for the first time, we have taken a very holistic approach. See, many times when you try to answer partly, the benefits are not taken by the industry to the extent they have been earmarked, because it is not answering all the questions. But for the first time, on the electric vehicle side, on the demand side, we have the FAME. On the production side, the base production, as you know, in electric vehicle, there are two main components: the battery, for which we have now the PLI on ACC. Second component is the powertrain, so we have the auto component. And thirdly, the entire vehicle, we have the entire vehicle. So we have answered the complete circle. So now if anybody looks at EV manufacturing in India, they cannot point anything where government is not encouraging.
Thank you so much, Arunji. Thank you so much, everyone, for joining ETAuto panel discussion on what's in it in the PLI scheme. It clearly comes out that this is completely futuristic, and it is going to enhance India's share in terms of value term. It is also going to give an edge to the Indian manufacturer in terms of producing more sophisticated technology, which has not been the case. Thank you so much once again for joining ETAuto.
Thank you, Nabil. Thank you.
Thank you.
Thank
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank you. Exiting now.
Thank you, Nabil.
Thank you.
Everything. Thank you.